Morning. Thanks for everybody coming. My name is Mark Shuttleworth and I work in the VAT office and I help people with inquiries and advice. I'm not an accountant, so I can't give you any tax advice. That would go against what we're there for, because we're there to stop people from abusing the system. As you can probably see, I've been there a few months now, so there's a lot there to learn, and I don't expect any of you to know it all. I don't. So, right, this could be interesting, so it doesn't look like it's animated. Things we're going to cover today, I'm going to talk about different rates of VAT and what taxable supplies are. We're going to talk about VAT registration, the thresholds, and then we're going to go into invoicing. RMS is our revenue management system. It's our new computer system which we brought in last November, and it has had one or two problems, as most new software packages do. I think largely we're through most of them now, but it does allow you to do a lot more than the old system did. Most of you, if you are VAT registered, you probably are more recently VAT registered rather than being well-established businesses, so you may not remember or be familiar with the old system. Talk about the one thing which is important to everybody, and that's how do I recover all the VAT that I pay. So we'll go into a little bit about that, talk about record keeping, and what you can and can't claim back. A couple of more specialist areas, we'll talk about late VAT returns and late payments. There's some new rules which came in the beginning of this year, so I'll go into that. And then there's one or two VAT schemes which will help you, depending on the style of your business, with dealing with the quarterly or monthly VAT returns that you have to submit. And then at the end, I'll mention one or two of the public notices which are available in the right button this time. So, yeah, as I said, the animation isn't working, so everything's coming up on screen. So, what is VAT? VAT is basically a tax which is added to the supply of goods and services, and it applies to those goods or services which are made in the Isle of Man or the UK by a taxable person. I'll explain what a taxable person is shortly. And importantly, they must be made in the course or in the furtherance of your business. So that means that you've got to use the things that you buy in making a taxable supply. Sounds a bit complicated. It will become a bit more apparent as we go on. So, types of supplies. There are lots of different rates of VAT, but there are basically two types of supply. There are taxable supplies and there are non-taxable supplies. Now, under the taxable supplies, we have standard rated, which is currently 20%. We have the reduced rate, which is 5%, and we have the zero rate. And some people might say, well, how is that a taxable supply? But within the VAT Act, anything which is applied a VAT rate of which the zero rate is treated as 1, that is a positive rate of tax, which mathematically doesn't make sense, but it's classed as a taxable supply, which is important. Non-taxable supplies, they're simply supplies which are either defined by the VAT Act as being exempt from VAT. That means you cannot charge VAT on that type of supply, or they're outside the scope of VAT. In other words, the supply is taking place outside the Isle of Man or the UK. So if we look at the VAT liabilities, basically anything you buy or sell is liable to VAT at the standard rate. But the law being what it is, there are always exceptions. And VAT is no different. The three main exceptions are reduced rated supplies, which are defined in Schedule 1 of the VAT Act. And you have zero rated supplies, which are defined in Schedule 9, and exempt supplies, which is defined in Schedule 10. For anybody who's making notes, don't worry, I'll ask Jessica if she can do a PDF version and send it out to you if you're interested. Okay. The other thing I didn't mention, which I apologise for, if anybody's got a question while we're going through, please ask. Okay. So, let's have a look at the rates of VAT. So, we've mentioned the standard rate, and it applies to everything. Basically, the VAT Act starts off saying that everything is taxable at standard rate, except where it's not. So, reduced rated supplies, they're defined in a specific schedule. Anything which is liable to the reduced rate has a heading under that schedule. These are some of the items. I'll pick out one there in particular, and that's energy saving materials. Now, there is a public notice available about that, and it's known as 708/6. And that basically defines certain materials which can be supplied at the 5% rate. This is a UK rate, it's not an Isle of Man rate. Currently, that has been zero rated. So until the 31st of March 2027, you'll be able to get solar panels fitted and installed at the zero rate, instead of paying what would normally be the 5% rate. And it applies to things like home insulation, so whether that's cavity wall or loft insulation, things like that as well. Two rates there which are specific to the Isle of Man: hotel accommodation, holiday accommodation, and home improvements. So if we want to get work done on our houses, get a tradesman in, he will do that work at the 5% rate. If you live in the UK, it's standard rated. Hotels and holiday accommodation, similarly, they're at the 5% rate here. In the UK, it's all standard rated. But those are very specific. Then we'll go on to the zero rate. A few things which are fairly obvious there. Children's clothing is zero rated. Food generally is zero rated. Sweets aren't, because they're not classed as food. Food is one of those interesting areas which there are lots of anomalies and peculiarities about it, like when is a hot pie not a hot pie, for example. New houses, they're zero rated. So if you buy a newly built house, it is actually zero rated to you. The importance there is on behalf of the builder, because he's making a taxable supply, all the cost of his materials he's used in building that house, he can recover. If once you bought your new house, when you sell it in 5 or 10 or 15 years' time, it's exempt. The significance there is that if it wasn't exempt, we'd all have to register for VAT, and then we'd all have to do complex calculations on what we do, which is a business, and what we do, which is not business. So that's to try and keep things simple. And then the last rate is the exempt rate. Some things in there. Yes?
Mark, if you're the builder, are you 0% exempt, or how are you claiming that back?
Right. For example, you're a builder, you're building a new house. New houses are zero rated, and the work that goes into constructing them is classed as zero rated as well. Now, if you go out and buy the materials from a building merchant, he will charge you 20% VAT on those materials. But because you're using them in the construction of a new dwelling, which you're going to sell and therefore make a taxable supply, the VAT will say that you can recover the VAT on those materials. If you get decorators and joiners and kitchen fitters to come in and do various parts of the work, their work to you will actually be zero rated, because you're working on building a new house. Once that house is deemed to be completed, or the owner has occupied the house, it's no longer seen as a new house. Okay? But it doesn't mean to say that your supplies necessarily stop, because if you're finishing off the house, let's say the planning approval gave you landscaping and everything to do as part of the development, you can still go ahead and finish that and zero rate it. But if you do landscaping afterwards, that's largely going to be standard rated.
And is that the same with like septic or any other type of road works that may be necessary to in reason?
Yeah, building and construction is one of the slightly more complicated areas, but you know, if we can have a little chat about that at the end if you like. Okay. Yeah, finance, insurance, they're the things that we come across most. You don't pay VAT on your bank charges, and when you take out insurance policies, we don't pay VAT on insurance. I know in the UK they have a thing called insurance premium tax, which we don't, so we'll just leave that there. Land is also mentioned there, and that's how we get back to used houses, if you like, being exempt from VAT, because they fall under that land exemption. So we mentioned the phrase taxable person before. A taxable person is any legal entity, so it could be a sole trader, a sole proprietor, like you or me setting up our own business. It could be a partnership, it could be father and son, or two brothers going into business together. They're a partnership. It can be a partnership between limited companies, or you can have limited companies in their own right. And all of those are taxable persons. But you only become a taxable person when you're either registered for VAT or you're required to be registered for VAT. Now, let's have a look quickly at how VAT works, which doesn't look very interesting when it's not animated. You're a joiner, so you go out, you buy some timber and some screws and fittings, and you decide you're going to build a nice table which you're then going to sell. So you buy the screws and the fittings and you incur VAT. And that's called input tax for our purposes. And you can reclaim that if you make a taxable supply. So when you've built your table, you sell it and you charge VAT on the sale. So that is then called output tax. And rather than having to pay us the £4 output tax that you'd be charging there, you've got £3 input tax which you can offset against that. So when you do your VAT return, you've got £4 going out, £3 coming in, so the net amount that you pay us is actually only £1. Now, if you bought those screws and didn't use them for making the table, let's just say you used wood glue and joiners, joints, dovetails and things like that to put things together, you wouldn't be able to reclaim that £1 VAT on the screws because you haven't used them to make a taxable supply. That's a very simplified overview of how VAT works. So, how do you know when you're required to be registered or whether you should be registered or not? Well, the VAT threshold is currently £85,000 in a rolling 12-month period. So that's not January to December, it's not 1st of April through to the 31st of March. It's literally a rolling 12-month period. If you go over that amount, the decision about registration is taken out of your hands. You are required to register. Now, why should you register for VAT? Well, if you've gone over the 85,000, you have to. You don't have a choice. But if you're under 85,000, it might actually be to your benefit to be VAT registered, because you may be making supplies, and to make those supplies, you might be incurring large amounts of VAT. And obviously, if you're VAT registered, you may be able to recover that VAT. So that may help your cash flow. It may actually help you to make more money, which sounds a bit weird. But if a lot of what you do is actually zero rated, so if you run a shop and you're selling children's clothing, everything you sell is zero rated, but you're going to incur VAT on the heating, the electricity, the maintenance of the building, on shipping costs. You may pay VAT on your rent. Now, if you're not VAT registered, you can't obviously recover any of that money. So, some businesses, it might actually be beneficial to be VAT registered before you're required to be. Not true in every case, but in some cases it is.
No. What if you're a sole trader and working from home? You're not even in the shop or in the business.
Well, there are still costs you will incur at home. You may have a second telephone line which you use exclusively for your business. Once you're VAT registered, you can actually reclaim the VAT on that telephone line because that's your business line. You can't recover it on your private line because that's non-business.
No. What about the products you import and stuff like that?
If you're buying goods which you're then selling and making taxable supplies, once you're VAT registered, you can reclaim the VAT on the purchase of those goods. Bear in mind, if you run a fast food shop or a burger van, or maybe a mobile sandwich van, burger van, when you sell your burgers, that's hot food, that's standard rated. If you have a mobile sandwich shop, sandwiches are zero rated. So you may have VAT costs which you're incurring, but when you're VAT registered, you can then reclaim that. So, yes, once you go over, you have to register, but if you're under 85,000, there's no minimum threshold. You only have to be able to demonstrate that you're, excuse me, that you're making taxable supplies, or you have an intention to make taxable supplies. So to freshen the voice there. So that decision process depends business to business. Any of you got an accountant or a friend who's an accountant, good idea to bend their ear and see if you can get a favour.
Also to R&D, is that anywhere included in the same aspect of that? Research and development costs included?
Yeah, as long as the important thing is, as long as you can demonstrate that you are either making taxable supplies or have an intention to make taxable supplies. So if you've got a product that you're trying to develop, you're doing research and maybe experimenting and things like that, those costs that you're incurring, as long as that product at the end of the day, you're intending to market that or sell it, excuse me, you can then show that there is an intention there. And whilst there is an intention, you can register and recover VAT.
So all like the supplemental material, like for like books or for any type of lab tech or anything like that you may use, you can then claim that.
Yeah, so if you engage, say, a scientific lab to do some tests for you, you can recover those VAT costs as an intending business.
So that was a bit interesting because if I used the first 6 months to order a lot of products from China, then I obviously have to pay VAT to import, tax, and etc.
Yeah.
And it was a half a year with quite a lot of importing products to test and find out what to sell. And I could actually, how long back can you reclaim when you are registered?
When you become that registered, you can backdate when you became that registered from. So it's not a case of you apply and you become registered from today. If you want, you could choose to become registered from the 1st of June, or maybe the 1st of May, or maybe even the 1st of January. There's no limit to how far back you can go, but you have to be able to demonstrate that at that point in time you had that intention to make taxable supplies, or you already were making taxable supplies. Now, the only downside to backdating your registration is that from that date coming forward, all the sales that you have made then become subject to VAT. Now obviously if your customer base is largely private individuals, you can't go back to them and say, actually I need to charge you an extra 20% on that product because I have to pay VAT. So you're going to have to effectively swallow that bill.
Right, so I should set kind of a starting point
Yeah.
from the sales rather than...
Yeah, again, that's why I suggest that if you know accountants or bookkeepers, they're the sorts of people who can look at your figures and give you a more reasoned argument as to whether it's good or bad for you to register on a backdated basis. Again, if everything you sell is zero rated, it's not going to make much difference. But there might be VAT costs that you can recover.
In my case it's 20%, so...
Yeah. Once you become VAT registered, there are certain pre-registration expenses that you can recover. So if you became registered today and 2 months ago you took some legal advice or financial advice, that's a professional service, and services which are not consumed, like heat or telephone or electricity, you can actually go back up to 6 months and recover them. But if for things like telephone bills, once you receive the bill, you consume that service, so you can't actually go back and reclaim that. But if that occurred after your effective date of registration, then that will become recoverable.
If you receive a grant from another organization,
Right.
or business,
Grants, donations, things like that, they're not what we would call the consideration for a supply. In other words, you haven't provided anything to get that money. Donations are obvious because people just donate money. So that is what we call outside the scope of VAT. So that's one of the non-taxable supplies.
and would the organization that gave it be able to claim for?
There's no VAT involved.
Oh, perfect.
They're giving you, if somebody's giving you a grant to do something, they're not making a taxable supply to you, there's no VAT implications for you, and there's no VAT implications for them. So, yeah, again, that's just a mess now. This is what our new online system looks like. So once you've got everything set up, anybody called Jimmy, hello, that's what your home screen would look like. And you've got the taskbar at the top, and there are various things that you can do. So you can look at your account details there. If you put items on a watch list, they will show up there. There's a messaging section, and there's also notifications. So if we sent you a message online, that would show up there. If you have a VAT return that's due to be submitted, you'll probably get a reminder in there. The old system, we used to send out an email to all the VAT registered businesses whose VAT return was due at the end of that month. The new system doesn't do that. It wasn't the way we designed or planned it, it's just the way the system was set up. So I've mentioned the taskbar, and each option on the taskbar has got sub-options. So under the inbox, you can either just go to the inbox generally, or you can start a new message. It's not like an email because it's contained within a secure system. So it's slightly more secure than just sending an ordinary email. So if you're sending maybe slightly sensitive information using the RMS system, it's a little bit more secure than just popping an email.
So if you have modest VAT, submissions on a monthly, let's say monthly or quarterly, your system is sufficiently good, let's say, for an individual small company like me to just go on and I can manage my own VAT affairs. I don't have to commission a chartered accountant to do it for me.
No,
I can do it on my own, right?
Yeah, anybody can do their own VAT returns. Obviously, it depends on how complex a business you've got. So, if everything you do is very simple and it's all standard rated, then working out how much VAT you've got to declare at the end of your VAT period is relatively straightforward. We'll talk a little bit about record keeping in a minute, but through the system you can look at your payment history, you can make a payment, you can also look at the your account. It says tax accounts because the second phase of our system is going to be launched next year, and that's going to bring in the customs and the excise regimes, the things that deal with distilling alcohol or gaming and gambling or air passenger duty, for example. They're all going to be brought into this system. So somebody might have a number of different business interests all within their single VAT registration, or their single registration. So they may have different arms which impact different areas of our operation. And they will be able to do, in theory, they will be able to do all their VAT returns and all their excise or customs returns through this one portal, which makes it much easier for you as a user. And then obviously you've got the actual returns themselves, and you can file an individual return, and you can look at your returns list, so you can see the returns you've submitted historically, and also the ones which have yet to come up. And if you've got any outstanding, then they would show up too. So there's a little example there. This person has been a bit lazy over the last few months because they've got several overdue VAT returns. We've got the return that's due there, which obviously is the one that they need to get in, and then the next period, which is not yet due, so they can see that as well. That's a very simplified view. Once you become VAT registered and you get online, you can have a look around at these things. The subject that everybody wants to know about is how do I claim my VAT back? How much can I get? Can I have it all? In order to claim VAT back, you need to keep a record of all your purchases. And each record, we need to have various details: the date of the invoice or the supply, who the supplier was, the value of the goods, and also the VAT that was charged to you. Now, if somebody charges you the wrong rate of VAT, so let's say, for example, you buy £100 worth of goods, and instead of charging you £20 VAT, they've got it a bit wrong, they charge you £40 VAT. Well, obviously, that's too much. But if that's on the invoice, that is what gives you the entitlement to claim that amount back. They've overcharged you, but they've got to declare that £40 to us. So if they don't declare the £40 to us, it's not you go after, it's them. So if they pay the £40 and you reclaim the £40, tax is neutral, so we're not worried. Now, in order to do all these things, next slide, I'm sorry, it's going to be very messy. You need a VAT invoice. Now, I know you probably can't read the detail there, but over there on the far right, we've got the supplier's name, and then at the bottom, we've got the supplier's VAT number. We've then got an invoice date. That's what we call a tax point. Don't worry too much about things like that. Tax points are basically when the tax is either due to be paid, or it's the date you can reclaim that from. We've got the customer's details, we've got a description of the goods, including the VAT rate that has been applied. but the important thing is you've got the amount of VAT. So if they charge it wrong, but it's shown there, you can claim it. Common things that people claim back that they're not normally allowed to. Fuel. Lots of people think, well, I run the car film business, so I can claim the VAT back on all the fuel. You can, if you pay a fuel scale charge, or the CO2 emission charge, I think is what they call it these days. Basically, what you're paying is kind of a license fee to be able to recover the VAT on all the fuel. Now, if you run a commercial vehicle, like a van, you don't need to pay that scale charge because under the auspices, if you like, of VAT, we don't see people driving around in transit vans as their family vehicle. I mean, things have changed and evolved over the more recent years, and we have lots of people driving around in pickup trucks, and they go to kids' parties and everything. So, yeah, things change, but not necessarily for that. Corporate hospitality, yes.
Just with the fuel, I do quite a lot of trips across either to get stock or for training, so
Yeah.
usually I will put that fuel through the business.
You can demonstrate that you use that fuel in the furtherance of your business. So if you've gone away to collect stock, obviously you've got the ferry, you've got your purchase invoice from your supplier, and if it's collected from the depot and the depot's in Stockton, and you've driven to Stockton to go and get it, then obviously you're going to incur that on your fuel on the way, and we'll be able to see from your fuel invoices. Well, we've got service station just outside Liverpool, we've got somewhere up the M6 or something. So we'll be able to see from those documents that you picked up that fuel whilst you were away, and the reason you were away is picking up stock. Yes.
Yeah, to claim that VAT, for example, on food, do we have to, they can have to be registered in business name?
Yes, ideally, any purchase invoice that you get should be in the name of the business. So if you've got an incorporated company, it should be in the limited company's name. If you have a partnership of 2, 3, 4 individuals or limited companies or a mixture, sometimes you have a registered partnership name, and if you do, then you can use that name. Otherwise, it needs to be in the name of all the partners. And if you're a private individual but you're VAT registered, if you have, again, a registered business name, if it was addressed to John Smith, Smith's surfing shop, you could demonstrate that it's not a purchase for you personally, it's a purchase for your business. It becomes a little more grey, it's probably the best way of describing it, when you are a business as a private individual. But lots of people have registered business names and things. So if you can attach that sort of link, it makes it easier. Yeah.
Does it work for like transport, like when you happen to fly to go to a conference and you then have to like have your bookings and things? Is that working the same?
Passenger transport is 0 rated. So you haven't got any VAT to claim there, but that is one of the common areas that people make. They think, well, I've flown away to this conference, or I've gone on the boat here, or I've got the train there, and they think there's VAT on it, and they work it out and claim it back. It's 0 rated, so there's no VAT on travel. Obviously, if you stay in a hotel or holiday accommodation in the UK, you're going to incur VAT at 20%. Again, make sure the invoice is addressed to your business, and then you can claim the VAT back on that. As long as you demonstrate that you're over there for a particular purpose. It may be a trade conference, you might be going away collecting stock and materials for your business. You may be going over to see a new client. So as long as you can demonstrate that it's in the furtherance of your business, then
accidentally put it in your personal name instead of your company name?
Yeah, I would suggest in the first instance, go back to the hotel, you know, contact them and say, I stayed here last week, if you paid for it using a corporate card or business card, ask them if they can re-invoice you. Sometimes they will, sometimes they won't. But as long as you can demonstrate why you were there and what you were doing, it shouldn't be a problem reclaiming it.
This applies for sole traders too.
So yeah, again,
Registered business for sole trade.
yeah, as long as you can demonstrate why you were there and what you were doing, then it should be relatively straightforward.
So I can reclaim on that if I go to UK to sell my strings.
Yeah, I mean, if you can show that you've been away and you've been selling products to people in the UK, you are perfectly entitled to do that, because for VAT purposes, the Isle of Man and the UK is the same area. So if you're VAT registered here, you can go away, sell goods or products, charge VAT, you still declare that to us, it's got nothing to do with HMRC. Likewise, UK VAT registered businesses can come over here and operate, they charge us VAT, which they then pay to HMRC. And then that all goes into a big shared pot, but that's for another day, that's far more complicated. Obviously, if you've got an office, maybe in your reception area, you've got a TV which is displaying current news headlines or maybe showing off products that you make or develop. Let's say you've got a good deal on TV and you've got two for the price of one. If you put one of those TVs in your front living room, that's personal, non-business use. So you won't be able to claim the VAT back on that one. So record keeping, that's probably a bit more like my desk. And obviously, it doesn't help you when you're trying to put together your VAT returns and things like that. Keep your records up to date. So, a few little tips. If you keep a separate sales and purchase ledger, whether it's a physical book, whether it's an Excel spreadsheet, whether you've got an accounting package, doesn't matter. The key thing is you've got a method of recording what you've done, both in terms of your sales to generate output tax and your purchases, which obviously generate your input tax. Purchase invoices on, yeah.
Sorry, I would just like to ask, is there MTD here in Man Island?
No. Making Tax Digital is a UK campaign, it's nothing to do with the Isle of Man. Whether it will go down that line, I'm not aware of. Certainly, I'm not aware of any current plans, and when I say current, I don't mean in the next year or two either. So, yeah, that's probably several years away, yeah.
So the system that you were showcasing earlier is the one that everybody uses here?
Yes, that's our own system. It doesn't link into any software packages. It's not like the UK system where things like Xero and Sage.
Exactly.
You can enter all your data, press send my VAT return, and it populates your VAT return for HMRC automatically. We haven't got any of that yet.
Do the businesses use Xero here and Sage?
Yeah, there's no problem, and you can still use exactly the same accounts packages. The VAT rules fundamentally are exactly the same here as they are in the UK. So all the tax coding settings that people in the UK use, they're just as relevant here.
Thank you.
Okay. So yeah, you might have a business where you have lots of different purchase suppliers and they provide loads of invoices to you. Sometimes it might be difficult trying to find one or one particular purchase invoice. Little tip, if you give it your own reference number, then you're not trying to find somebody's strange serial number on their invoices. You put your own number on it, so then if you're looking to purchase the 10th invoice on your list, that's number 10, it's easy to find for you. And when you're claiming your VAT back, sometimes we ask for some backup or supporting evidence. And we might say, oh, can you supply the 4 largest purchase invoices? And you can do that then so much more easily.
Does the same thing work for retraining and educational materials when you retrain? So say
So,
for
well,
instance-
yes, some training is done professionally, and therefore you will get charged that. Obviously, if you've been on a training course, as long as it's relevant for your business, then if you incur that, you can claim it back. Some training, if it's educational, then there isn't a VAT exemption on education. So certain services or certain supplies of education will actually be exempt from VAT, which means you won't incur any VAT on the actual course. Again, when we get into areas like education, it becomes a little more complicated. It's another one of our little minefields.
Yeah, that was the thing I was thinking about, like with the price of books, or the price of drafting material if I need it.
Yeah. Well, certainly, if there are specific textbooks for a course, then it's likely that you'll pay VAT on the textbooks. Now, again, if you're using them to gain some qualification, which you're using in your business, then again, the recovery of the VAT on the books would be allowable. Yeah, so, and if you keep your records up to date, that's going to help things as well. And then you might get a desk that looks more like that. And if you've got a desk like that, it's much easier to put all your figures together and get your VAT return done. And the key word is promptly. We don't want late VAT returns because, as I mentioned earlier, there were new rules that came in for late VAT returns, which came in January this year. So far this year, we're applying a period of grace, which we're following the UK on. Basically, if you send a late VAT return in, you will get a warning saying, oh, you've been late, so you've got a black mark. You'll get 2 more black marks if you send your next VAT returns in late. And on the 4th late return, you'll actually then get a £200 penalty. And it doesn't matter whether your VAT return is a payment return, i.e. whether you're paying us money, whether it's a nil return, in other words, there's no tax for you to pay in that period, or even if it's a reclaim where you're seeking a VAT refund. Any of those returns, if they're late, will get a black mark. The 4th black mark will be a £200 fine. If you're then still late, you will get another £200 fine every time you're late. If you have a clear year, blackboard's white clean, and you start again. We don't really want to go down the route of penalising people for being late. There are, as ever, there are some exceptions. So if, for example, you're running your own business and you suddenly end up in hospital, it's not going to be very easy for you to get your VAT return in, and that's a reasonable excuse. There are some, just say that you'd forgotten about it or you didn't have the money in the bank to pay it, isn't an excuse for sending your return in late. There is a mechanism you can go down. If you know things are going to be difficult, if you know you're not going to have the funds there, then the best thing to do is get your return in, establish what the debt is, and then secondly, to contact us so that you can arrange a time to pay agreement. And that then, if you don't follow that agreement, we won't view that return as late, we won't view the payment as being late, as long as you fulfil that agreement. And then that is then a mutually agreed payments over a period of time in order to bring the debt down.
You sort of answered my question. It was more just, if I'm not fully ready, but I just make the submission, then can I ask it's not exactly complete, but I've submitted, and please can you give me a window, a grace window to...
Yeah, two things. If you're still waiting for some documentation to come in, when it comes to claiming input tax back, you can claim that back any time after the date. So if you claim it this period and it's due and it was due this period, that's fine. If you decide or you haven't got the document and you want to wait till next period, you can claim it back next period because you didn't claim it back this period, but you're entitled to it. If you're not quite in a position where you can submit a VAT return, including all your sales information, you can make an estimated return, whereby if you know that your VAT liability is not going to exceed, let's say, £9,000, you could do an estimated return for £10,000. You then know that the VAT liability has been more than covered. And if you pay that, if that then works out that you paid too much, we're not going to criticise you for it because the tax has been brought to account, maybe over accounted for, in which case then you'll be able to get a small refund on that overpayment. But if you don't pay enough or you don't pay any, then obviously that changes things. But as I say, we don't want to have to chase people to get VAT returns and VAT payments. We'd rather people get them in on time, or if they can't make the payment, at least then discuss with us what the issue is, so that we can understand them. Because we don't know what's going on with each of your businesses individually. There's around 6,000 different VAT registered businesses on our records. We don't know what's going on in every single one. So only you know exactly what the state of your business is, and if you know that there are problems, we'll only know if you tell us. You know, ultimately, our job is A, to collect the right tax in the right period, but B, we want to ensure that we can continue collecting tax. So it's not in our interest to put people out of business. We just want to encourage people to get as much of the tax, if not all of it, paid when it's due. That's enough about that. So I mentioned there's one or two VAT schemes. Normally, you deal with invoices. So it's the date you raise a sales invoice, the date you receive a purchase invoice, and that's what we go on. That's the standard method of accounting. I think accountants call it the accrual method. Cash accounting, basically that's the exact reverse, because you only account for the VAT on your sales when you get paid. And but the downside is you can only reclaim the VAT on your purchases when you pay them. Now, if you pay all your suppliers promptly, that's not going to be a problem, because once you pay, you can reclaim the VAT. If you've got people who are a bit slow to pay you, cash accounting might be maybe something which you could look at. It doesn't suit every business, and obviously if you were to change or go over that threshold of 1.35 million, I will point out that's designed for small businesses in the UK, not the Isle of Man, where most medium-sized businesses, they come under that as well. So slightly different focus there. There's no application to do it. You don't have to fill in any forms or anything. You just decide at the start of the tax period you want to become cash accounting. That means that any purchases that you've claimed back in the past that haven't yet paid, you're no longer entitled to that input tax. But any supplies you've made that you haven't been paid, you no longer have to account for the output tax. So there are balances there. Again, it might suit some businesses better than others. Another scheme is the annual accounting scheme, which is really good because obviously you have to do one VAT return every year. How good is that? You get 2 months to submit it instead of one, so that's better. The only downside is that you're going to have to wait a whole year to claim any of your VAT back on all your purchases. So if you run a shop where you're buying sweets and alcohol and tobacco, you're not going to go onto annual VAT returns because you have to wait a whole year before you can claim all that VAT back. And there's going to be a lot of VAT, so that's not really going to be something you're going to want to entertain. On the other hand, if you're a builder, for example, you're buying lots of materials from suppliers, you're incurring VAT every day, you want to go onto a monthly VAT return, then that is going to suit you. Whereas an annual return would be completely impossible. Again, to go onto an annual accounting scheme, there is a form you've got to complete. You then have to work out what your interim payments are going to be. So rather than paying odd amounts each quarter, you sort of set 9 payments through the year, and then when you submit the VAT return, that's when the balancing payment would become due. Now it might be that at the end of the year, you've actually already paid more VAT than you needed to. In which case, your final return, your annual return, is actually going to get a refund. It's a way for bigger businesses that haven't got cash flow issues to manage things in a more structured approach.
How are the interim payments calculated?
It's if you're a brand new business, then obviously all we can do is go on projections of what your sales are going to be. It's normally 10% of what your either projected turnover is going to be, or we'd look at your previous year's trading, and let's say you sold £90,000 worth of goods or £90,000 worth in VAT terms in the year, then we would look and say, well, if you pay £9,000 over 9 months, then when you put your final VAT return in, the balancing 9% which is left will clear the sheet.
What if you're predicting a refund?
Well, if you're in a refund position over the course of a year, then probably annual accounting probably isn't it for you anyway.
What if it's only a small refund?
Yeah. We would try and look at what your normal trading pattern is, and if you're not over the year, we would look at what the value of your taxable supplies is over a year, and that's basically how it's worked out. If you normally expect to be in a refund position, then annual accounting is not going to be something which is going to suit you.
If that was the case, is that dealt with on that VAT form, or will we need to speak to you?
Well, the actual form itself is just asking for basic information. When it comes down to looking at what the interim payments would be, that would involve discussions with our debt management team, because they're the people who look after that to make sure that the drips of money are coming in when they're meant to be coming in.
You would never drip money out.
Sorry.
You would never pay money out if a refund.
You wouldn't get refunds that way.
Yeah.
The refund would only come at the end of the accounting year, because a refund is only made once the VAT return has been submitted. So if you expect regular refunds, then monthly VAT returns are going to be more in order. Okay, you're going to have to do 12 a year, but you're going to get your refunds much more promptly. If you're on quarterly, then obviously you've got 4 VAT returns a year, but you've got to wait 3 months to get your next refund. So you've got to look at what you normally do and what you normally expect to see whether monthly or staying on the normal quarterly or maybe going to annual is more for you. There is another scheme, it's called the flat rate accounting scheme. Again, there is a public notice on it. It's not available for all businesses. You've got to have your VAT inclusive turnover has got to be below 180,000 to join in. So if you're running a restaurant or something, you might find that the flat rate scheme is good for you, but very quickly a successful restaurant, it's going to go over that threshold, and therefore they may not be able to even join the scheme when they start. The benefit is that you don't have to keep purchase records, because the flat rate is attributed to you based on what your business style is. So for somebody in the construction sector, the flat rate I think is 9.5%. For somebody who runs an old-fashioned corner shop, they're going to be on, I think it's 3%. That's based on UK statistics, which say that basically 17% of what corner shops buy, they're going to reclaim VAT back, and that's going to be basically 17% of what their normal output tax is, because most of what they buy is standard rated, so they make a bit of profit, and then that's what they make in output tax. So the flat rate squashes those two together, comes out with a low net figure, and that's what you apply to your sales. It also makes you keeping account of your sales easier, because you just total it all up at the end of the quarter or the month, apply the flat rate, and that's what you pay. Again,
So the whole VAT scheme, is it, I'm trying to clarify, is it backward looking or forward looking? In other words, if I'm a software developer, so I invoice, and let's say I invoice one client in the UK £100,000 for a year's work, let's say, just as an example.
yeah.
I would pay, so let's say they pay me monthly.
Right.
And it's
Well, for your type of business, you would be on a flat rate of 16.5%, because most of your services, you don't buy that much in the way of goods. You don't have many purchases in order to make your supplies, so the offset is much less, which is why it's got a higher flat rate percentage.
But I would still do my VAT looking back in time, because I would say I've actually invoiced 100,000 for the year, therefore I owe you £16,500 for VAT.
Depending on when you become VAT registered.
Oh yeah, so let's say I have just gone past that threshold,
Yeah.
let's say, right?
Yeah, so let's say you go over the threshold on 1st of April,
Yeah.
and you raise an invoice on the 30th of April, then if you're on the flat rate scheme, you're going to pay £16,500 based on that £100,000.
So that's backward looking.
Well,
I've done the work.
I've
done the invoice.
It's looking at the work that you've done
Yeah.
on the point of registration, or if you apply to join after a tax period, it's from the start of that tax period.
But is it monthly where I have to do this thing to check my VAT? Or is
It depends on whether you're on.
I elect to do.
If you want to do monthly VAT returns, you would do that on a monthly basis.
Okay.
And if you're on annual returns,
So
then
quarterly,
obviously
right?
you do it on an annual basis.
Okay.
Yeah.
And then what happens if that client disappears and my next client is in Argentina and I don't have any UK VAT, but I am VAT registered, and
Yeah.
then you guys are expecting me to make a payment, is that right? Or suddenly,
Well, no, because-
suddenly you get no payments from me. Do you go like,
Well, that's going to be outside the scope of Isle of Man UK VAT.
but the
Because
fact that
they're,
I'm VAT registered,
yeah,
and my business makes £200,000 for that year, but it was from clients outside,
But
you
if-
have no,
but
you don't care.
they're outside the scope.
Yeah.
As long as you still have an intention, as long as you're still able or have an intention to make taxable supplies in the Isle of Man UK, you are entitled to register or be registered for VAT. If all your clients, all your business takes place outside the Isle of Man UK, then it's outside the scope of Isle of Man UK VAT.
Right.
So if you had a client in Argentina and you make £200,000 worth of software services to him or
So
her,
there's no VAT.
then it's outside the scope of VAT.
But I still submit. I submit my
you would-
quarterly return, and I say nothing from the UK
You
or
would
Isle of
put
Man.
200,000 in terms of sales, and
Yeah.
there'd be no output tax because it's outside the scope.
Okay, fine. So I still declare the amount,
Yeah.
but it's at zero
Yeah.
rate. Okay, that's fine. Thank you.
Yeah, it's not the zero rate, it's outside the scope.
Okay, answer. Okay, sorry. Thank you.
What's the reason? So, because I had the same case as the gentleman there, so or you get, for example, you get an invoice from someone who is putting on the invoice 0 for VAT because he's not VAT registered. So it's basically 0 or outside of scope, or is it 0 rated? What do I put in my VAT return if I have someone who invoices me who is not VAT registered?
Right, if they're not VAT registered, then there is no VAT on it. So let's say, for example, I make some goods and I sell them to you.
Yeah.
I'm not VAT registered. That just goes down as a purchase in your net purchase figures. There's no VAT content. It's not at any rate. There's no VAT because I'm not a taxable person. Because I'm not a taxable person, I cannot charge you VAT.
Yeah.
So your purchase is not, there's no VAT involved.
So it doesn't appear on your return at all?
Well, there's no
If you look
VAT.
at your accounting system, you need to say,
Yeah, you put it in.
no VAT, 0 rated, 20%. So what you put, I put out of scope or 0?
It's outside the scope.
Out of scope.
Yeah, as a purchase.
Okay.
I've got a question that somebody emailed in, which is kind of in your area, and it's about making supplies of software services. Now, obviously, if you make a supply of software services to a business or a private individual in the Isle of Man or UK, you're going to charge VAT at the standard rate of 20%. And if you make that supply of software services to a business or a private individual outside of the EU, I'll just hold it at that point, that is outside the scope of VAT. Now, although we've left the EU, if you make a supply of services to a private individual within the EU, you're not liable to any UK VAT, but you may be liable to VAT in that EU member state. Because they're a private individual and the supply you're making is a taxable supply within the EU. If you make the same supply to a business in the EU, there's no requirement for you to deal with VAT. It's outside the scope. They have their own rules in all EU member states how to treat that supply and therefore bring the appropriate VAT to account.
So basically, if you have, as long as you have a VAT number for the person you're charging
yes.
in the European Union,
Yeah.
you don't charge, otherwise you charge.
Yeah. If you know it's a private individual or somebody's buying it for non-business purposes, then you may have a liability to VAT register in that member state. Yeah. That's one of the things that Brexit didn't simplify, I'm afraid. And there we go. My colleague Martina, we both cover inquiries. If you've got questions, by all means pick up the phone and ask. Drop us an email, simple email address, customers@gov.im. If you're not sure about something, pick up the phone and ask. You know, don't try and guess. You know, we're there to try and help you. We want to make sure that you get it right, because then that's more reassuring for you. You don't then worry, well, I've got that right, it's that wrong. You know, will that man be coming after me? You know, we want to make sure that you're able to deal with everything in a timely and prompt manner. Because if you do things correctly and you do it at the right time, it makes our job easier as well. All right. Anybody got any general questions?
I was hoping to clarify one thing. So if business has different activities, let's say it's providing IT services, but then for whatever reason wants to sell food as well. So food would be rated at 0% and IT business.
Well, yeah, you can have a VAT registered business which has different business streams. Now, these different business streams may be subject to different rates of VAT. So in which case you'll have your, let's say, sandwich sales, you'll have your IT supplies, you'll have your legal services. Obviously the IT and the legal side are going to be standard rated, but if you're selling sandwiches, they're 0 rated. But it may be that you also get into a bit of catering, which is nice platters of sandwiches. Catering is standard rated.
Right.
So there are little ins and outs, little anomalies like that. But basically, all your supplies, you put them all together when you put them on the VAT return.
Right.
Now, if you're in, I'll use the example of land and property. If you're renting property out, if it's residential property, it's always going to be exempt from VAT. If you're renting out commercial property, it might be a block of offices. That starts off as being exempt from VAT, but you can elect to tax that property. Now that means that you charge VAT on the rent, but any costs you incur maintaining the building, you're then able to recover because you're using the building to make taxable supplies. We're back to that old argument again. If you use a product to make taxable supplies, then expenses incurred relating to that product, you can claim them back. Now, if you're renting property out and you've got an office block and you've got a block of flats, you're making both taxable supplies and exempt supplies. Don't go there, because that's partial exemption. Partial exemption is an even more complicated area. Anybody else?
So when you were talking about the registration and the sales, if I decide to register my business because I know sales, we're going to open a shop or whatever in July, but then I've been incurring costs and I've been paying VAT, does it, because I'm assuming we're going to go towards cash accounting, does that mean by the end of July, if I registered 3 months prior, all of that has to be done by
Oh, well,
end of July?
right, so if you've already got a business which is up and running, but it's not over the VAT threshold, you've got the power to decide when you become VAT registered.
Yeah, it's not
Now,
trading yet, and it's not selling
right,
yet.
if you're not trading,
Yeah.
but you're able to demonstrate that there's an intention, maybe let's say you've taken out a lease on a shop and you've got an agreement with a supplier to provide you with product, you can demonstrate there's an intention there to make taxable supplies, and therefore you can apply to register at that point. Now, if you want to wait until the shop is up and running and you're selling goods, you can do that.
I can backdate, right?
You can backdate your registration.
But
You
then
can
all the paperwork has to be at
Well,
once.
yeah, but you could register. Let's say, for example, you start trading on the 1st of July and you apply to register on the 15th of July. Now, from the 15th of July, all your sales then become liable to VAT. And anything you buy which has VAT on, you can claim back. But I mentioned a thing called pre-registration expenses. Now, let's say, for example, you bought 100 teddy bears and you've sold 50 of them. When you become VAT registered, you've still got 50 teddy bears as stock on hand. So you can claim the VAT back on that element. So in other words, if you paid £100 VAT on your teddy bears, you can still claim £50 back as a pre-registration expense because you've not already used those in making a supply. So once you sell them, it's not stock on hand. So that sale that's gone. If you voluntarily backdate, then you bring that sale into the scope of VAT. But that then allows you to recover the VAT on that expense, if that helps.
I was going to say, what's the incentive as well for the economic growth of your business? So if you're not having to declare VAT because you're making less than 85,000,
Yeah.
yet you know that you're going to have to possibly incur costs if you go over that amount.
Yeah.
So you keep
There's-
your business marginal to what you.
Yeah.
You get what I mean?
I do, yeah. There are, I'm sure there are plenty of businesses out there who they look at their pricing structure so that they don't go over that threshold. They don't want to have the burden of VAT. It's not necessarily the tax burden itself, but it's maybe the burden of all the paperwork, the bookkeeping, the various things they've got to go through. Other people like getting VAT registered. They sort of see it as a badge of efficiency, or it's like a recognition of what they do. So some people like to be VAT registered for that single reason. There's no right or wrong. At the end of the day, the law says once you go over 85,000, you have to register. If you're below 85, we can't force people to put their prices up. We have no control over that. If they're below and they choose to remain below, that's entirely up to them. Okay. Any more? One more.
Yes, I'm wondering about SIG codes and how do you pick one for standard industry?
Oh, right. Your sort of business identification.
Right.
There is quite a large book which covers a wide range of businesses. What they do, so whether it's manufacturing, what they manufacture, the retail sector. It covers whether you're selling used clothing, ladies' clothing, gentlemen's clothing, children's clothing, whether you're selling clothing in a shop or whether it's online or a market stall. So there are lots of subcategories under a very general heading. And what we try and do is we try and put you into the correct area, or as near to that area as we can. It doesn't have any impact on what you do in terms of VAT. It's purely for our own internal statistical purposes. So we can look and say, well, we've got 32 pig farmers and 16 sheep farmers and 12 dairy farmers and 15 mixed farms. We're only interested in that subdivision if somebody might just say, how many farmers have you got? You might say, well, 106. Well, how many of them are dairy? It could give us that ability. Mm-hmm. Some areas operate differently, and so what they do in terms of their normal business model might be different. So that gives us a little bit more insight. Yeah?
So I've been VAT registered since September, and I'm on 20%, but I thought that I was meant to be on the flat rate, but my accountant deals more with like gambling, she sort of does mine on the side, so I have a feeling that I should be, purely because I don't have that much, like when I buy stock, it's not very often, like I'll buy an actual piece of machinery like a laser, like I've got 4 lasers over 3 years, so a lot of the 20% I'm paying is pure income, rather than I can't claim anything back.
We'll have a chat at the end. Okay. Well, I hope you've not found that too boring. Thanks very much for coming, and hope you found it beneficial. All right. Thank you.
Thank you.